Dingity ding ding ding.
The stock market, aka the world's largest casino, just closed on the day. I have to admit, it was pretty freaking boring. In fact, I'm pretty sure I've had more fun literally watching paint dry, but hey, that's just me. Maybe it's just the type of paint that I get to watch. But in this video, I'm gonna be breaking down why the market was so incredibly boring. But most importantly, I really wanna get into why I think that this is the calm before the storm. We're gonna have a little bit of nothingness, and before you know it, I think really near the end of this week, we're gonna get quite a bit of excitement. So we're gonna be chatting about that in this video. But of course, before we get to all of that, if you enjoyed these type of market breakdowns, don't forget to like, subscribe, don't forget to comment, really helps me out with the algorithm. With that being said, let's rock. So by the time all the pit bosses kicked all of us degenerates out of the casino, here was the official headline. Stocks and Monday little change as investors look ahead to Powell's speech and retail earnings. So Friday of this week, Friday, August the 22nd at 10 a.m., Fed Chair Powell will be speaking at the Jackson Hole Symposium. Now, this is technically a multi-day event, but obviously everyone cares about what Powell has to say, and that's going to be going down at 10 a.m., 30 minutes into the trading day. And yes, historically, this is a very impactful speech. It lasts about 10 to 15 minutes, so you're definitely going to want to be paying attention to that. And also earlier in the week, on top of all of these, yes, FOMC meeting minutes on Wednesday, but from here on out for the remainder of the week, every single day, Tuesday, Wednesday, Thursday, and Friday, there's going to be a Fed speaker making some sort of public appearance. So yeah, it's going to be a Fed monetary policy heavy type of a situation. And then with respect to earnings, yes, we're still in earnings season. Technically, it's this week and next week, and then we're donezo for this particular season. You might want to be paying attention to Home Depot. You might want to be paying attention to Target, and you might want to be paying attention to Walmart. Those are the three I'm personally paying attention to. They are arguably three pretty impactful companies. So that's what's on the docket this week. And then next week, the final week, that's when we get to hear from NVIDIA. So basically, we have upcoming monetary policy discussions, we have upcoming earnings for companies you might care about, but that brings us to why today was so boring. And basically the TLDRs, nothing was going on. We didn't have excitement in options trading. We didn't have excitement in data drops. We didn't have excitement globally. Really, the big news of the day is what in the world is going on with Russia and Ukraine. Trump-Zelensky meeting live. Trump and European leaders strike upbeat tone as talks continue. The heads of Germany, France, and other European leaders join the Ukrainian president, Mr. Zelensky, and Trump at the White House in the quest to end the war. This was the hot news of the day. And as you can see from the charts, it was pretty much a nothing burger. Our main objectives are security guarantees, stop the killing, and go for a trilateral meeting. So that's what they're stating, and it does seem as if we're making some progress that way. But overall, like I already said, it's pretty much a nothing burger. The S&P 500, here's the daily chart making an all-time high on Friday. Today, technically a lower high and a lower low. In the short term, that's a bit of a bearish trend, but overall, this is clearly an upwards bullish trend. Same thing in the NASDAQ, upwards bullish trend on the daily chart. Last couple of days though, lower highs and lower lows. Personally, I'm just waiting for this to revert. The one that's looking a bit weaker is actually Bitcoin. So on Thursday of last week, we ripped to a new all-time high after we got this technical breakout. Unfortunately, the technical breakout didn't hold. We actually at one point today almost snapped the 50 EMA, but thankfully we had some buyers step in there and push us back up. So I'm going to be looking for a recapture of some recent highs and really just this downward sloping line. If we really drill it into what happened today, this is exactly what I'm talking about when it was like watching paint dry. We went nowhere. Little up, little down, little up, little down, little up. That's all that happened. It's true in the SPY, it's true in the NASDAQ. The small cap sector, a little bit better, in fact, green. Bitcoin got a bit of a recovery at the end of the day, but overall, nothing happened. And not only is that true in price action, same thing in the options market. You could see the delta was jagged. We didn't have a nice trend. Same thing in the NASDAQ, super jagged. And the one that was incredibly lethargic was the Mag 7. We popped, we dropped, and then we did absolutely nothing. But I don't mean to just pick on tech here. It was pretty much the entire S&P 500. Yeah, there was a little green. Yeah, there was a little red. But overall, this is what happens when there's nothing scheduled, when there's no exciting options bets. And it's really what happens when your biggest news is Zelensky heads back to Washington under pressure from Putin. European leaders to join Ukrainian president to visit the Oval, seeking a path to end the war with Russia. When that's your biggest news and nothing else is going on, it's no surprise that we didn't get any exciting movement. But you should know this is very much the calm before the storm. As we get into the later half of this week, that's when things are going to get very exciting. And I want to explain that. But first, I want to show you mathematically, quantifiably, I want to show you the empirical evidence of how you knew going into today, before anything happened, that it was going to be a boring day. Because if you ask me, an important skill of a trader is to know when to even play the game. Not all days are built the same. Not all weeks are built the same. And today we had evidence before the market even opened that it was most likely the high probability pathway that today was gonna be nothing. For those of you who tune into my live show, you know Monday to Friday, 9 to 11, shameless plug, but you know one of the most common things I talk about is positive and negative gamma, which is one of the major Greeks, and especially it's important to track when you have such prolific, such popular zero DTE option trading, or really the rise of option trading in a general sense. I rewound right here to 9:30 in the morning, and you can see this is very, very purple, which means a ton of positive gamma. Now, for those of you who need a quick refresher, positive gamma is not bullish or bearish. What it means is sticky price action, as if we go up, the market makers sell it back down. If we go down, the market makers buy it back up. It's kind of a rubber band. It's actually just like a giant area of a black hole for price where you just really don't trend. Well, obviously, negative gamma is the opposite. It's when you get going in either direction, you really get going. So it's basically sticky price action versus slippery price action. Regardless, you could see at market open today, that's a lot of sticky price action. That's a lot of positive gamma. And it goes up 150 points, it goes down 150 points, and throughout the day, it just really didn't change much. This is the sign of a lot of call selling and a lot of put selling, most likely to open positions, and it basically just puts bounds on the day, and nothing changed throughout it. And unfortunately, looking forward to tomorrow, there's really not even going to be a change from that. In fact, if you're watching this in time before market open on Tuesday, I want you to be prepared for the fact that we're probably going to repeat what we saw today, as in a bunch of nothing. But then it gets exciting on Wednesday, because Wednesday is the volatility expiration, and when vol expires, at least in the current setup, then that's going to be opening the door for a potential move. So I think the fun from at least an options perspective is going to get going on Wednesday, and then that leads us into some announcements Thursday and Friday. But the big thing Friday is Powell. Powell has a reason to hedge Jackson Hole signal as data zigzags. So very quick recap. You know, last week, CPI report came in on Tuesday, cooler than expected. That's a good thing. On Thursday, we got the PPI report, the producer price index, that came in higher than expected. Not a good thing. So basically, between Tuesday and Thursday, we had very confusing, conflicting inflation reports, and that's going to make the job of the Fed that much more difficult. But anyway, we know Jerome Powell is going to be speaking this Friday, 10 a.m. You got to pay attention to it, because there's a lot of expectations that we're going to basically get some insights to the next steps of monetary policy, which has a huge influence on the day-to-day, week-to-week, and month-to-month movement of the stock market. But as I was reading this, I have to tell you, look how bad this has been. July jobs report upended the labor market picture. So the initial release is all these black bars, and then when we finally get more information, they revise it. Look at how many times they had to revise down January, February, March, April, May, June. Look how bad May and June's were. As in, this is what we were initially told, and then the next month they're like, oh, sorry, we were completely wrong and horrible at our job. Every single month they are overestimating. That's absolutely insane. And I actually found this graphic to be pretty crazy too, of how we went from a cool inflation report to a hot inflation report last week, of how it really impacted things. And these are basically just the odds of a 25 bips rate cut in September. So we got a 40% up to a 97, and actually at that point there was even a chance of a 100 bips rate cut cumulatively by the end of this year, and now we're down to 84. So at this point it looks like we're still going to get a rate cut, but the odds of how like strong and dominant it's going to be keep going back and forth, because once again, as this title said, it just keeps ping-ponging back and forth, and really they don't know which data is the data that they should be leaning into, because apparently you could just make it up and post it and influence the entire market, and then a little bit later be like, hey, sorry about that. So that's why as we get to the end of this week, I think things are going to get even more froggy. Now, obviously, I wish I could sit here and confidently tell you, oh, you got to be bullish, or you got to be bearish, and we're going to be turning here. No one has a model that can accurately tell you that. What I can do is tell you that right now, this little period, the first half of the week, is going to be extremely boring. There's a lot of positive gamma. This is not the time to swing for the fences just because the odds of us actually going to the fences is very, very low. We get to the second half of the week, and then all of a sudden, the opportunity is going to be a little bit different. And now we have a higher probability pathway of making an actual move. And at that point, that's easy. Then you just have to identify the trend. Are we trending up or trending down? And then you bet with the big money. So these periods, I find that you have to really protect yourself from yourself. Don't do anything silly, because when you're making big bets in a non-moving market, it's really just a boredom trade. So right now, calm, cool, collected. This is the calm before the storm. And later in this week, ideally, that's when things get exciting. That's what I have for you today. I appreciate the good vibes. Of course, if you have any questions, comments, or concerns, let me know in a comment below. I'll get back to all of you. That's what I have for you. Thank you, thank you, thank you. I'll catch you in the next one. Peace.